Historically, September is a negative month if you look at the averages over time. However, in an election year, it tends to be flat to slightly positive. So it's hard to say. Coming off a huge rally this summer, certainly in August, the best August since 1984, you've got a lot of momentum coming in. Historically, it's negative, but in election years, it tends to be slightly positive. So we'll see if that comes to bear this year as it relates to the election itself, Aline. It's an interesting dynamic. It was pretty well thought of as a foregone conclusion that Biden was going to win just a couple of weeks ago. And in the last 2 weeks since the passing of the executive order to extend unemployment benefits done by President Trump and the conventions, President Trump has actually picked up 6 percentage points in the polls. So now it looks close to a neck-and-neck race. The number one thing you want to see from a stock market standpoint is it's less important who the president is going to be. It's just more important that you have gridlock. So whether you have a Democratic president or a Republican president, you want to make sure that either the Senate or the House is of the opposite party. What we call it in America is gridlock is a good thing. And that's particularly important for this election cycle because the Biden presidency has committed to raising corporate tax rates from 21% to 28%. Now, David Kostin over at Goldman Sachs is expecting S&P earnings to be $170 for 2021. He's a little bit higher than consensus of $166. But he's done the math, and he says if Joe Biden is elected in a blue sweep, meaning the president is Democratic, the Senate is Democratic, and the House is Democratic, and he could actually affect the tax raises, that would take $20 of earnings off the S&P 500. So the earnings for 2021 would go from 170 down to 150. And with that level of growth slowing, if that was the case in the case of a blue sweep, the multiple would also come down. And we've calculated that would potentially lead to a 25 to 30% correction in the stock market. Now, that's the bad news. The good news is we don't think that's going to happen. So whether Biden
Trump
wins
is better
or
for the
Trump
market?
Wins, we do. Gridlock is better for the market. Yes, generally it's accepted on Wall Street that a Trump presidency is more business friendly, but the most important thing we need to see is gridlock. So whether Trump wins or Biden wins, one of the other houses, either the Senate or Congress, has to be the other party so that they don't increase the corporate tax rate. But as far as your direct question, how does Wall Street perceive it? Wall Street would like to see President Trump be elected because his policies are more business friendly. Leaving aside the social issues, et cetera, from a business and a stock market standpoint, the policies are more friendly to business. So we'll see what happens. But historically, Aline, if you have a gridlock, whether it's a Democrat or a Republican president, the stock market tends to do very well as long as one party doesn't have complete power. So that's what we're hoping for in November. And it looks very promising that that will be the case, which will be very, very good for the stock market.